Real estate market cycles for dummies. How do you invest, or how do you catch real estate market cycles? What's the strategy? You cannot time the real estate market just like you cannot time any other market. But what's the strategy except for dollar cost averaging and trying to invest in every market? Okay, this is my model. Call it Boris Dorfman's model. Okay. Okay. This is a cycle circle, right? So this is the bottom of the market. These are the lowest prices. Let's call it 2011. Okay. The market crash happened in 2008, and the prices, okay, the prices bottomed out. These are price. The prices bottomed out in 2011, okay? This is the peak. Year, I don't know, let's call it 2030, 2025. Okay, this is equilibrium. Equilibrium? Okay. I must have said it wrong. Anyways, so this is bottom, this is the top. The reason it's not 2008 because market crash happened and prices bottomed out a little bit later than that. Okay, let's call it 2010. Okay? So, what happens from here? Okay, so the prices started rising, and they will continue to rise until they start to fall. We don't until they peak out, right? When they peak, nobody knows. 2-3 years ago, somebody was saying it's a peak. Somebody's saying today it's a peak. I don't know. Maybe it's 2021. Maybe it's 2030. Okay. Okay. So you buy real estate here. You buy real estate here. Okay. You're trying to capture, you're trying to capture the cycle on the way down. Let's call this 2008. Okay. Market crashes, you buy real estate. You don't know when it crashed, so maybe you start buying here. It bottoms out, you continue buying it. When you're here, you invest in real estate notes. You buy, you become a lender. You buy notes, you do it either individually or you do it through a fund like ours, okay? You buy real estate here and you invest in paper, in mortgages. Here, okay? How do you know when you're at equilibrium? You don't, okay? Follow your gut, okay? We're in 2021. Do you think we're here or do you think we're here? If you're optimistic about prices going up for a long, long time, if you think this is 2030 indeed, okay? One, you can do both. But if you think we're going to peak out in 2030, then we still have long ways to go to the top, okay? You buy real estate. If you think, and again, it also depends on the level of risk you're willing to take and how risk-averse person you are or how old you are. Maybe you're nearing retirement, you shouldn't be risking that much. But if you think we're closer to the bottom of the market, you buy in real estate. If you think we're closer to the top, you invest in notes. Okay, guys, so let's recoup. And yeah, it may be a little sloppy, but if you think we're closer to the bottom, we have a lot of upside in appreciation, you buy in real estate. Okay, and depending on your level of comfort and how adventurous you are and how low your interest rate is, you can move this up here and you buy real estate in this region, right? But if you're looking for absolute half, if you think we're closer to the top than on the bottom, you become an investor in notes, okay? For example, you're lending 60% of the value, okay? Somebody comes to you with a $100,000 purchase, you give them 60 grand. If they default, you take a $100,000 property. You know, the same $100,000 property you would have to buy here. So the risks over here are much less. Upside in buying real estate obviously is a lot more, but since you can't time the market, some of you can buy real estate one a year or a couple a year, that's great, but you know, follow your gut, see if you think you're closer to the top or closer to the bottom, and make these decisions. And I'm talking about market buys. If there is a way for you to buy real estate for under market price in any market, then follow your gut. Thank you, Boris Dorfman, LBC Capital. I'll see you guys next week.